Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, July 17th, 2023. Before I click through the charts, just want to encourage you to please click like, share, subscribe to the Wicked Stocks YouTube channel, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily Triple Q, daily SPY report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week in 5 to 10 minute video format that you never see on YouTube, that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% swings, kind of as a bare minimum on those two individual weekly stock picks. So check out wickedstocks.com. Let's jump into the Tesla charts. This is a weekly chart you're familiar with. This green line, by the way, I've added as our 1% margin, our 1% upside threshold. You know, with long-term line studies, and this is one, this goes back at least 6 months, back to the January low, about 6 months. With the longer term line studies, I've used the 1% violation threshold for many years in terms of, the validity of a buy signal if we were to close above 287.17. And if you're selling 287.17, you really don't want to stop out. I'm talking more position traders, not day traders. Day traders have their own method to their risk management, and I'm not going to interfere with that. But I'm talking, if you're a 3 to 5 day swing trader, a 2 to 3 week position trader, or you're holding positions for several weeks, a couple of months, the 1% threshold is a valid approach. If we were to close at 290.04 or higher, and this really needs to be at the end of the week, daily settlements at 290.04 are valid long entry or short cover signals. But in terms of kind of a full-throated approach, where you're buying the market, then anticipating that 414.49 all-time high within 3 to 5 months, that would be a weekly settlement on Friday at 290.04 or higher. Just want to be clear. You're probably aware of that. I've mentioned it many times. This is our resistance, 287.17. I can back up a little bit and remind you that it was about 2, 4, 6, 7 weeks ago that we settled above this 18-month descending channel top that is now at 188.47. The initial 2 to 3 month objective, which was realized in about 3 to 5 weeks, was the 287.17 rising channel top. We've been pushing, testing it 3 weeks now over the course of the last 5. 3 individual weeks we've actually tested it. And the overall target is 414.49. The timing of that is next to impossible, but I do think having closed above this descending channel top, we can anticipate a retest of the 414.49 November 21 all-time high over the next year or less. And if we were to close at 290.04 at the end of this week, I'd say over the next 3 to 5 months, this vertical move will continue up to 414.49. So that is the big picture. Until then, we can fall off from 287.17. The channel bottom to the 287.17 channel top is, where are you? I do have that noted. 192.33 this week. So lower 190s, upper 180s. I'd say the lower 190s, the 192.33 channel bottom is our base of long-term support. Will we actually fall back into that zone over the next few months, over the next couple of months? The answer to that is more clear, yes, if we settle this week, for instance, below 250.77, this intermediate channel structure that is also rising at a similar pace. So, downward retracements to 250.77. This is well suited for the 3 to 5 day, 2 to 3 week position trader. If we fall back into low 250s, it's a great opportunity. If you're more of a 2 to 3 week swing trader, if you're short in the mid 280s from last week, the last couple of weeks, you're taking profits in the lower 250s. You can also go long in the lower 250s in anticipation of the possibility of bullish rotation over the following several weeks back to the 287.17 channel top. So that is sort of the nearer term dynamic. I'll be zooming in here in a moment on the daily chart, and it would be a settlement below 250.77 that would tell me we have a good high through the month of August, and we should, over the following 3 to 5 weeks, 5 to 8 weeks, 2 months at the most, fall to 192.33, where we could bottom out through the rest of the year and turn back up again. So the downside tipping point is 250.77, but we are testing meaningful resistance, and more aggressive traders who can trade both sides of the market, play the short side at 287.17, you can have at that. So let's take a look at, I'm going to take a look at the daily chart here. There's a few things going on. I'm going to zoom into this yet again. But, for the week, we've got 265.76 that can contain session weakness, might even contain selling into later week. I don't expect to see that today. Let me just actually jump to I'm going to zoom in here. I've got 277.58. That is a downside 3/8 Fibonacci over the last 5 days. It also correlates pretty well with this low that was put out about a week ago. 277.58 is a 3/8. I think it's 277.52, if I recall, is the high of this low. And it's not far off from Friday's low, 276.31. I really think it's 277.58 that if violated, I don't then expect 265.76 within the day. That may well happen. All of the minor points, though, on the way down have been carefully chosen. In fact, 75.20 is a 50%, 72.82 is a 5/8 downside over the last 5 days, 69.61 is an old level. That is the low settlement price that actually held well on Thursday, but it is 265.76. That is the aggressive sort of stick your neck out buy zone for not only day traders, but perhaps 3 to 5 day swing traders. We could come off of here back into the mid to upper 280s again within 3 to 5 days of testing 265.76. I will also say with respect to 277.58, I'm keeping it light. I kind of scratch my head over whether to consider that a session containment. Can it contain daily selling pressures? But the fact that we keep testing and not closing above this significant zone of resistance that I mentioned earlier, excuse me, at 287.17, it's 285.51, by the way, on the daily chart. We keep coming off of that. I want to keep it pretty light. So intraday support, if we close below 277.58, I think that is our signal for 265.76 within just a couple of days. So, 2 to 3 day swing traders, 3 to 5 day swing traders closing below 277.58, I think we should expect 265.76 within a day or two, where we could bottom out for the day anyway, quite possibly in the later week. And if we close below 265.76, that previously mentioned 252.65 formation, which once again on the weekly chart is 250.77, this area down here lower right becomes, a 2 to 3 day target if we were to close below 265.76. This low 250s, prime area to take profits if you've been short from the mid to upper 280s over the last couple of weeks, and also a good area to go long if you're kind of a 2 to 3 week swing trader. We can turn right back up into the upper 280s again within several weeks. Finally, it would be a settlement below 252.65, and I can't ignore that weekly chart level at 250.77. The settlement below this area tips the market south through August trade. Now for the upside. If we happen to push or open today above this 287.17 level, 295.05 is in reach. 295.05 is not shown on this chart, but is nothing more than a 5/8 upside Fibonacci from the 414.49 November 21 high against that January low of earlier this year. 295.05, this is an area where we can stop for the rest of the day. And once again, if we settle today at 290.04 or higher, that is the beginning of a buy signal, I think. And I say the beginning, it doesn't become clarified until a Friday settlement of the same. But we could potentially, within the week, if we settle Monday at or above 290.04, this 313.60 to 314.66 region is not out of the question. And then closing the week, as I said earlier, above 287.17 by the 1% margin of 290.04 Friday settlement or higher, I think we're 3 to 5 months away from reaching this 414.49 all-time high. So if you bought those out of the money puts, if you're long the 250s or 245 out of the money puts or the 190 out of the money puts, I know if you've done that and you're still long, then this has been definitely a test of patience. And if we close at 290.04 or higher, especially at the end of the week, my suggestion is to cover those out of the money puts and reverse and reach for 415 out of the money calls that don't expire for at least 6 months. That is all I have for Monday's Tesla Report. You have a great day. Please click like, share, subscribe, and check out wickedstocks.com.